Hello, everybody. Happy Wednesday. Hump day, they say it is. And what is going on in the markets? It looked like we were going to take a little bit of a breather this morning here. We got CPI data, big inflation data that kind of came in right as expected. So I'm looking at bond market here right now. The bond market, rates had come down a little bit this morning. They're back to unchanged. The 10-year is right at 441 right now. So kind of unchanged. Market initially was a little bit hesitant on these numbers, a little bit back and forth, back and forth. Since then, though, we've rallied. S&Ps are at their high of the day right now, up about 22 points. The Nasdaq's up about 50 points. The Dow is up 200 points. It is the small caps, the Russell, the IWM. They are in the green, but just slightly right now. So they are lagging a little bit. And of course, we've got to talk about Bitcoin, right? And crypto. Bitcoin saw another brand new high at 93,000 before pulling back a little bit now. Really interesting. Let me go over to the charts here. If we look at Coinbase, okay, Coinbase has been all over the place today. In fact, let me bring in a better chart than this. Let me bring in my Thinkorswim chart that's going to show Coinbase, and I want to put it up here on a 1 minute chart today. Hello, everybody. Amazon to the moon, somebody says. I like that. Let's get Coinbase, and here we go. So you can see Coinbase here. It's kind of down early this morning. Okay. Big run up here. And that's when Bitcoin just exploded again up to 93,000. And now on its lows of the day. So again, this is a proxy. Coinbase, maybe Mara, but Coinbase is really the proxy for Bitcoin. That and MSTR. Let me punch up MSTR. I'm going to imagine that we will be seeing a similar type of graph, similar type of chart on the 1 minute chart. And there it is. It's almost an exact replica of Coinbase. This is MSTR. So same thing. Kind of, was doing nothing this morning here. Big rally up, brand new highs again on Coinbase, on Bitcoin new highs. And then down, we're at the low of the day here. So, the market this is good. I mean, we can't just have this straight line up all the time. The little sell-off yesterday, and I say little because that's what it was, that's good, okay? And a little, jockeying back and forth here, that is healthy for the markets. Because if you can put in, just some range-bound trade for a while, that sets up for the next leg higher. Speaking of next leg higher here, many of you might be in our MSFT Microsoft position, which finally showing some signs of life here. We had been waiting on this one for a while. We got a nice pop in Microsoft today after being down this morning. Microsoft was actually down like $3.5 this morning. A nice little pop, so we adjusted our position. We always talk, or very often talk, about putting on an iron condor position. Okay, an iron condor is a position where you have a short call spread and a short put spread. Anytime you have a strategy with the word iron in front of it, that means you have positions on both sides of the ledger, call position and a put position. This is just a regular condor, a call condor, not an iron condor. The reason being is because the entire position is all on one side of the ledger. It's all calls. So what we have now is a long $10 wide put spread, and we have a short $5 wide put spread. So where do we always say that we want a stock to go, right? What's the goal? We want to go to the short strike. Well, in Microsoft, we now have 2 short strikes. So at expiration, anywhere between 440 and 445, the 2 short strikes, that would be ideal. All right, everybody. You're not here to hear about Coinbase or Microsoft or whatever it might be. Let's talk about prop trading. What is prop trading? How many of you know what prop trading is, guys? How many of you have heard about it? How many of you have ever thought about, boy, maybe, this is something for me? And prop trading's been around for a while. But is it worth it? Is it worth it? Okay, here to learn, not heard of it. Excellent, Gene. Well, I'm going to tell you what prop trading is all about. And yes, it is something we do here at Prosper. I'm not giving you a pitch for it, but it is something we do. And basically what prop trading is, prop stands for, it's just short. Okay, it's a shortened version of the word proprietary. Okay, it is the shortened word for proprietary. And what prop trading is, proprietary trading, prop trading is, it's when a financial institution uses their own capital to buy, sell, and trade. Okay, so bottom line is, we have students, and other prop firms have this also. We have students that trade with our money. That's right. Trade our money, not yours. Okay? You get all the upside, none of the downside. We are the ones that are at risk, or a prop firm are the ones that are at risk. Okay? So why would anybody lend someone else or give someone else money to trade with? How is that a good venture? How is that a good proposition? Well, you know what? There's no one better that I know than this guy right here, Mike Patton, to explain it to everybody. Mike, welcome in. Really excited that you are here today. And I know a lot of people want to know about prop trading. The reason Mike is here, everybody, is, hey, Mike and I go back a long time. We've been doing this together for 10, 11 years, maybe even a little bit longer.
12 years.
Right? Maybe 12 years or so.
Perfect.
And Mike is a great trader, everybody. Mike is one of the first people I ever knew in this business, out of all the people I know, that actually went to work for a prop firm and became so successful at it that Mike is now back again with Prosper and started our prop trading firm called Thunder Trading. So, Mike, tell everybody what the benefits of trading with, and listen, there's benefits and there's downfalls, right? Just like we just talked about in the room, everybody, with that Microsoft position. When you're doing something that gives you a benefit, you're obviously giving up something as well. So, Mike, tell us about prop trading. Give us a quick background on your prop trading experience, and let everybody know, why it's really, really so important.
Okay, awesome. Thanks, Scott, and thanks, everyone. Again, my name is Michael Patton. So just to give you a quick rundown, proprietary trading, the biggest plus is that you have a lot more money available to trade with than you most likely would ever have on your own. So let's think of it like this. When you're trading your own retail account, right? And I've been there, all of us have done it, right? If I have $10,000 or $20,000, whatever the number is in my retail account, in order for me to get twice as much money, there's only 2 ways. Either I find the money somewhere where I borrow it, or I take it from some other place, like my savings account or my 401k, put it into a trading account to double my money that I could trade with. Or I return double, 100% on my trading to be able to increase the size of account that I have. So essentially, for retail trading, the only way you really can scale up your account size realistically is you'd have to keep trading successfully enough to build the balance up. which is fine. There's nothing wrong with that. But think about like this. In order to double my account size as a retail trader, I have to get 100% return, right? In order for me to get twice as much money as a proprietary trader, I don't have to make 100%. I just have to make a consistent return, reasonable enough. And when I say consistent, I'm not talking about 30% a month or something like that. I'm saying if you make 2%, 3% in a month, you do that consistently over several months. Most every prop firm, and especially us a funder, we will give you at least double your buying power. So now your account goes from our standard 100,000. Now you have 200,000. So you made basically a 6% return to get double your money. That's the big power of prop trading. So when I was getting into this business, that was the first thing I thought about. I was like, man, I don't have enough money to really build up. I mean, even if I get good, I was just thinking about this like 20 years ago. So even if I get really good at this, how am I going to really scale up? So it's basically the same logic that any company like Microsoft, Meta, Coinbase, if you really want to be in the big leagues with the big money, you got to get backing. That's why companies go public, so they can get a lot more money coming their way than they most likely would have made if they just kept doing business by themselves and kind of raising themselves by their bootstraps. Now, there's only one downside to prop trading I can think of, and that is it is a job. You do have to be disciplined. You do have to show up. You do have to do work. You can't do whatever you want. When you have your own account, you can pretty much do anything you want. But in the prop trading world, there are rules, there are standards, there are parameters. You have to stay within them, just like any other job. But if you really think about it, if you've ever run a business, if you do anything you want, it doesn't work that well.
Yeah, I was going to say if you don't want to work hard at it, whether it's
Yep.
trading for a prop firm, trading for yourself, or whatever it is, whether you're building widgets, you don't want to work hard at it, you're not going to be successful. Bottom line. Bottom
So
bottom line. So I'm going to put this slide up real quick, Mike, here,
sure.
so everybody can see. Really, there's 3 steps. Okay, there's 3 steps to trading for a prop firm. Okay, understanding the reason behind funded accounts, and Mike just kind of went through that. Why are there these funded accounts? And we do it, and other firms do it because we believe that the people that we are not loaning, but giving money to are going to be successful because they've gone through a regimen, they've gone through a program, and we've seen them show us to be successful. So do you get to keep 100% of the profits? No, right? That's where that give and take is. You get to use our capital. In our case, and in our program, you keep 80% of the profits. We keep 20%. Okay. Step number 2, one of the things that Mike teaches you, and one of the great things about our program, okay, most prop trading firms, once you've passed whatever, credentials you need to, they give you the money and then boom, you are on your own. Not here. Just like in my room, Mike Shore's room, Charlie Moon's room, you have your mentor, you have your coach there every single day. Same with our program. Mike Patton is there with you. And then Mike, because he has done this himself, because he is your mentor, he's going to show you how to outsmart, these challenges, secure your funded account. So, Mike, I know there's really 3 things you're looking at any one point. And we're going to get into some of the stocks here, guys, that Mike is looking at, as he's looking to trade here. But there are really 3 things here, okay, that we need to talk about: strategic and market trends. The first one is YCTO. That's what you've labeled it. What is YCTO?
Okay. So the YCTO is basically the gap that most people will recognize between where a stock closed the previous day, where it opens the current day. So if you can see my screen's on. I think you guys can.
There we go. There's Mike's screen now, everybody.
So let's look at Meta. So this is today for Meta. I do have a few other things on the screen, but the red dotted line, that is Meta's previous day's close. So that was the close for Tuesday. And today, Wednesday, we have the green dotted line, which is today's opening price. So YCTO is just the price range between the closing price of the previous session and the opening price of the current session. That's it. Now, the reason why this is so important is because when a stock is stuck inside of here or it's trading very close to it, we don't perceive there's much of a high probability the stock is going to be a good trend. So we look for stocks that basically break away from this range early in the session. You can see that here, where at the start of this session, we saw Meta break lower at first, and we were actually able to trade this. This was one of the alerts that I sent out. I give heads up every day in the funder coaching room, so people have things they can do while they're still learning how to identify their own opportunities. This was one we were able to catch on the way down. We did have a target, which actually was right about there, so we were able to get to the target, and then it came back up afterwards. So the YCTO is very important. It's just the place that you're looking for as the staging ground for where a trend either goes up or goes down. So if anything's not moving up, up and away, or down, down and below from that early first 15 minutes of session, if you're not seeing any progression, most likely that's not going to be a big trend.
Okay. So
Yep.
that's the YCTO, something that Mike has, come up with, Mike has developed, that is so critical to what he teaches and how to trade it. Obviously, there's other things Mike is watching also, just like we all do, right? Things that affect the markets. Recently it's been election results, right? And what Mike will tell you, I think, is that we love volatility. Just like I love it, Shore loves it, Charlie Moon loves it, Mike Patton loves it as well. We are all very well versed in understanding volatility and trading volatility. So before I get into the other stock that Mike is really honing in on right now, which is NVIDIA, which you can see on your screen right now, let's all go to it here, guys. Okay, what is our word of the day for the wheel? I'm sure you guys could have probably guessed this. Okay, it is prop. Make sure you get prop in the chat here for a chance at the wheel. And yes, I know we made a mistake yesterday with a couple of you that actually entered in yesterday, 2 of you, and for whatever reason, we effed up and we didn't get you on the wheel. So you guys know who you are. If you're here today, and if we see you enter in today, we're going to enter you in twice for today. So far, I haven't seen it come through. Either of you that oh, now I do. I see one of them. Okay, so you'll be on there twice, and if the other person is, you'll get on there twice as well. All right, let me get back to Mike Patton. Oh, there we go. Okay, Mike Clark, both people from yesterday, as you can see here, are entered in today. You guys will be entered in twice. Okay, let's go back here. I know another big stock on Mike Patton's radar is NVIDIA. So, Mike, let me go back to your charts here and show everybody what you're looking at in NVIDIA.
Okay, so let's talk about that. For NVIDIA, I was looking yesterday, the stock was moving up. We saw an opportunity there. I have to remember if we actually were able to grab a trade in that. I don't think we were, but it was looking like it was going to be bullish. Now, one of the things that I had to look at yesterday was there was big resistance for NVIDIA, and I want to show you guys where it is. Now, to do this, I'm going to have to bring up a chart that probably a lot of you have never seen before. So let me just quickly say what this is. This is called Bookmap. It's actually on Thinkorswim. You have to subscribe to it. It's a special feature on Thinkorswim that you can request. It has a cost to it. I'm not going to get into all that, but what it's showing is what's called the order book. So when you do trades, when you buy or when you sell, and you buy or sell at market price, you have to buy or sell to somebody else. There's just got to be someone on the other side. So you have orders that are posted to sell. You have orders that are posted to buy. We call the orders to sell offers or asks, and we call the orders to buy bids. So you guys have heard the bid-ask spread before, I'm sure. So what this is showing is any lines that are above, this white line is the last traded price of the stock. So any lines, these horizontal lines that you see that are above, they're just showing significant areas where there's a concentration of offers. to sell.
So, Mike, that big orange line up top there,
Yes.
that
Yes.
so what price is that actually?
150 exactly.
Okay, so
Now,
big round number.
yes, not surprising because
It-
that's usually where they are.
exactly.
So at 150, and it's not exactly at 150, it's at there and it's surrounding it as well, but it's concentrated most at 150. So think of that as the peak of the mountain of orders, then everything else kind of spreads to the other side where it kind of ends when you get close to 150.20 or down to 149.80 or so. That's where like it just kind of all disappears. So this is basically the mountain right there. And there's a mountain of 2 million plus shares that are waiting to sell at that price. Now, folks, what this means is that's resistance. That's the real thing. You can actually see it. And in trading, like for example, if I were on the trading floor and I could see where people have their orders waiting to do bigger trades, I could use that to my advantage. I could say, okay, well, when the market gets up to that price, this big trader is going to be selling a lot of shares. So there's a good chance this stock may not be able to easily pass through there, maybe not at all. So we do have massive resistance sitting above for NVIDIA, nothing we haven't seen before, but nevertheless, at this moment, they're showing at least 2 million shares to sell. Now, today we opened pretty close to that point, but we kind of slid down. Down below, this is showing the net order flow balance of buying versus selling, and it's showing that it's mostly been negative. That's why that line's going down.
Yeah, I think
So,
actually the high of the day from what I see is 149.77.
yeah, so it got really
Yep.
close. Just kissed it and went away, right? So, folks, the reason why I'm watching this is if someone's posting an order there and they're making sure everybody sees them, probably they think they can actually get filled. And a lot of times the market eventually goes right to these places and it eventually goes through them. So keep an eye on that. If you start to see this stock rallying towards that price, 150, a pretty good chance that when we get there, you're going to see a little dance around. Maybe the market dips a little bit, but if it powers through there, then we just have to look above and see what else is above there. And at this point, the next major level is at 155, then 160, but these are nowhere near the size of the one at 150. So Bookmap again, it's just a nice tool that I use. Most of the people in Funder, if they have Thinkorswim, I just recommend they use it to help us find trades. And on a side note, before I forget, same is true for Meta. Not as big of an order, but Meta doesn't have the same volume of trading as NVIDIA. So right here, we've got at 600, there's about 83,000 shares. For NVIDIA, that'd be nothing. But for Meta, that's big. So we got that level up there too. So in both cases, we have some indication that there's an expectation prices will go up. And most of the order book seems to be stacked on the top side. So usually when I see that, it means the market is actually pricing in. It's the expectation of higher prices. It's just a matter of when. So for right now, I would keep a close watch on those levels. If we happen to be trading near them, always expect that you're going to get some strong reaction as long as those orders are there. But if we clear through them, then it should be a pretty good breakout. And some good examples of times where that's happened. Apple back in June when that broke out strongly, we had a similar picture. We had about 3 million shares that were sitting there around, I think it was around 200. It broke through. I mean, it went basically $20 higher in 2 days. So this is probably a good place to look for a potential trade.
So, Mike, excuse me, a couple questions from
Sure,
from in the chat here, which I think are really relevant. Okay, somebody
sure.
want to know if you are day trading, and yes, I you can explain that. And what time frame on your charts do you use?
All right, so we are day trading, yes. I do recommend that when we look at intraday trading, it's a good idea to remember where larger orders were when you see them. So anytime we're trading, I usually take a quick scan of the market to see what's above and below. And then we just take a note of that. So if it's a large enough order that stands out day after day, just know it's there because that's probably going to be in place sometime later. This chart doesn't have actual time settings. You can, but it's more of a continuous setting. So it's kind of different. But when I do look at the market on a regular chart, it's always 1 minute for me intraday. I don't like to look at multiple time frames. I just have a daily chart just to see where things have been. and I have a 1 minute chart for intraday, and that's plenty. If you have those two, you're fine. Some people prefer more, but I really don't.
Yeah, it's kind of that old adage, KISS, keep it simple. You know what? I think we talked about it yesterday with
Right.
something else as well, right? So sometimes it can really, really get into overkill. Another question: people that get into prop trading, are
hmm
they experienced traders that have been doing this for a long time, or can someone just kind of starting out go through a program and try and get funded?
Good question. So Funder is set up to be an open door prop firm where anyone who wants to come in can come in. And the majority of the people we have are not people with a background in proprietary trading. It's very rare if someone comes in that does. Now, if you have a background in proprietary trading, it's still great. You can still come to us. But usually, people who have a long background in prop trading, they may end up going to a place like Citadel or Goldman Sachs or somewhere like that. But if you're trying to break into this business, that's out of reach for you. So Funder is set up to allow a person with the desire and the will to actually to learn how to trade. And we do provide training, and we provide all the tools and resources necessary, as well as, like I said, I give out opportunities throughout the day so people have an opportunity to at least follow along with what I find. But yeah, you don't have to have experience. I would say with Funder, we have a stocks focus and an options focus. You can choose either or. Some people actually do both. If you don't have any experience in options, I would strongly suggest you stick to stocks because you have enough buying power where you don't have to worry about
Yeah.
that. But if you have options experience, you can, of course, decide to go that route and use your knowledge and skills in that
And
direction.
and we close out positions at the end of the day, right?
That's right. That's right. So
Don't
everything is
take anything
intraday.
overnight.
Right. So no swing trades, no overnight trades. You can't trade through earnings or anything like that. But the reality is, in the prop world, it works better because basically you want to be able to be flat at the end of the day. You don't want to carry that risk overnight because you never know. I mean, a stock could be down 20% overnight. And when you're trading with that much leverage, you don't want to be on the wrong side of it.
Yeah, for
So
sure.
intraday is a lot safer and we get better results that way anyway.
Question, and I don't know the answer to this. I'm sure you do. Someone asked about if I'm in Canada, can they be part of the program?
Okay, so the short answer is no. Unfortunately, the Canadian government is not very friendly towards this sort of thing with the US markets. But what a lot of people do as the workaround is if they have any type of residence in the United States or something like that, they may work that direction. I can't tell you what you can do in that sense. I mean, you would have to look into it. But the bottom line is for the most part, no, you can't. You would have to be a US resident and that applies for other countries. Except if it's a U.S. territory, you're still okay. But if it's not, then unfortunately we can only service U.S. Residents or U.S. territory. Or if you have citizenship in U.S. but you're living abroad, it still works. Still do
Got it. Final call for the wheel, guys. You see the prop, okay? So please, 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 we don't want anybody to be excluded from this. Make sure you get that in the chat here. Another question for you, Mike. On average, how many trades per day would you say?
Okay, so if you're asking me personally, I'm typically going to average between three and if it's a really busy day, maybe six. Okay, so it's not a lot of trades in my case. I personally prefer just to park the money in the trade and let it work itself out. A lot of people in the room are scalpers, so they're in and out of trends. That works too. As long as you trade with the trend, and all we're looking for is trend. So if the stock's not clearly going in a particular direction, we don't touch it. At least that's not what we're supposed to do. And the best results we see are for people who just follow that idea. So if you're a scalper, you like to be in and out, but you follow the trend, great. If you want to kind of park the money in and let it work itself out, and you kind of manage the position throughout the day, that works too. But you don't have to do a ton of trades to make this work.
Awesome. And that's also a big thing. Everybody that day trades, or a lot of people I know that day trade, thinks it has to be just constant in and out and in and out and in and out. And that's
Yep.
really not the case. And like what Mike Shore does, Mike Shore's, short-term trading, day trading, it's not a prop trading, but Mike is concentrating on like 4 or 5 names, 6 names. He's not looking for 500 different things to trade. And again, guys, Trading is difficult enough as it is, regardless of the type of trader you are, day trader, swing trader, whatever it is. Don't make it more difficult, right? Get to the lowest common denominator and something that gives you the highest probability of winning, and focus in on it. Another great question here: do you provide trader alerts in and out also?
Yeah, we do. Now, I want to be clear. The purpose of the funder program is not to be like the a signal service, right?
Right.
The idea is I'm giving examples in real time. So there's going to be the direction, the where your stop should be, where you should be looking to enter, what's the exit target, and pretty much everything in between. So that happens on a regular basis. And that's only stuff that I point out. So if I point out something in the room, it's got to be something that looks like we have a good chance of winning, and it will just be any stock that I see that has the right pattern and profile trading. And of course, this is one of the ways you learn by observing what type of opportunities I'm selecting. So you get better and better at that. So that way you can eventually start to replicate. And all the stuff I use, by the way, you get it as well. If you're a funder member, all the tools I'm using, et cetera, you get access to them as well in the room. So it's not like I have something that you don't have. Everything I'm doing, you can.
Listen, guys, again, the bottom line is it's a great opportunity if you are going to be diligent, just like anything else. If you're going to work hard, it's a great opportunity to get a lot of capital to be able to trade with and keep the majority of the profits and have none of the risk. Motown guy, it's 80-20. Profit sharing is 80-20. And that's 80 to you, 20 to us, or, any firm that's out there, it's going to be something similar to that, but 80-20.
You don't share any risk. Right. And
Okay.
all the losses are absorbed by us, by the way.
Okay, so there's a couple links in here, guys. One is to find out more about the program. And then actually, Mike is doing a Webby tomorrow, right, Mike?
Yep. So tomorrow evening it'll be at 4:30 Eastern.
Yeah, I just so after the close of the market, I just put that link in there. Anybody that wants to join, find out more about it. Mike is doing a Webby tomorrow. All right, let's take a look at that wheel. Let me see, Mike Clark. Do we have the wheel ready to go? And while we're waiting for the wheel here, I'm looking for it right here. Mike Patton, any other stock that is really hot on your radar that you're looking for?
Right now, just Meta and Nvidia, but I would keep a close eye on Bitcoin-related stocks because, as you rightfully point out, these are moving. Post-election, we're basically seeing exactly what you would expect. Stocks focused on hydrocarbons doing well. Stocks focused on green energy usually not doing well. Bitcoin stocks doing well. So it's pretty simple. It's just whatever the expectation is will be the focus of the incoming administration. What industries are going to get the most boost? That's what we're looking at. So you want to keep an eye on those industries for that reason. Some industries are just going to be the same no matter what. Healthcare is probably going to be healthcare, things like that. But other things are going to have some impact. And Bitcoin, I would say, with the Bitcoin, you're going to have a lot of volatility for one major reason, and that is, as of right now, I just checked the stat, 22% of institutional trading firms own 22% of the ownership of Bitcoin ETFs. In other words, they're representing only 22% of the holders. And that's a fairly small number. If you look at other big stocks, there'll be a lot, like 70, 80, 90% is institutional money. So that means that the vast majority of the money in the Bitcoin ETFs and Bitcoin-related stocks, a lot of times, except for Coinbase, probably that's mostly institutional. But when you look at the ETFs, the majority of the money is actually retail. So when you have most of the money in retail, it moves. You're going to have lots of swings.
Because the retail trader, just think about it, guys. We're all retail traders, right? We are making a lot more transactions. We are in and out a lot more than a big hedge fund is going to be, where they're, more so buy and hold. So, absolutely. All right. We've got the wheel here, guys. This is a packed wheel, as many of you have said here. Here we go. The two of you who we missed yesterday, you are both entered on here twice. I checked it myself. So again, I apologize for yesterday. Mike Patton, can you give us a drum roll?
All right.
Not sure we can hear that, but
I don't know if you guys can hear
all right.
that.
I'm gonna pound on my
I think
desk
my
here.
mic filtered it out.
Okay, there's our drum roll, and the wheel is spinning. The wheel is spinning, and who are we getting to? John or Gilbert? Got a new winner today, folks. Gilbert, are you in the house? Are you in the house, Gilbert? Remember, you gotta be here to collect.
Gotta be in it to win it.
Gotta be in it to win it. Gilbert, are you here? And you know what? Since we had Mike Patton here today, oh, Gilbert, nicely done.
All right.
We've got some Funder swag too. I think that's what we're gonna give out today. I can't wait. So Gilbert,
Awesome.
you know what to do here. Shoot me an email at prospertrading.com. Shoot me an email with your name, mailing address, and your size. That is awesome. All right, everybody. Really, really appreciate everybody being here today. Mike Patton, thank you for being here and let everybody know a little bit about the world of prop trading. If you are interested in it, we put a couple links up there. One to get more information, the other one to actually register for Mike's webinar, which is tomorrow at 3:30 Central, 4:30 Eastern time. Let's get back to it, guys. There's there's a lot of movement. There's a lot of wrangling going on in the markets right now. So appreciate everybody. Appreciate you, Mike Patton. Have a great day, and we will see everybody tomorrow.
Take care, folks. Awesome. All right. See you next time.
Have a good one. Really appreciate it.